Good morning. We're here again with Jeff Unelp to talk about fraud and nonprofits. Jeff, you shared with me a heartbreaking article from the Boston Globe this weekend on the frequency and impact of fraud in the nonprofit sector.
Hi, Don. Yes, sadly, an organization serving the homeless discovered that their COO had embezzled over $100,000 in about a year and a half's time.
Yeah, I'm going to quote from the article. It says, to be sure, for profit businesses are regularly victims of fraud as well, but some say nonprofits are particularly vulnerable for a variety of reasons. Many nonprofits are small organizations led by people who are passionate about their causes but may not have a background in finance. Jeff, is this something that you see out in the field?
The Globe article nails it when they point out that nonprofit leaders generally don't have the same level of accounting, financial expertise for nonprofit. For their as-profit counterparts. We see it all the time. In business, it's not uncommon for a CFO to become a CEO. In the nonprofit world, you don't typically see a finance director go on to become an executive director. What we have seen is where the executive director may appoint someone internally as a finance director that's passionate about the mission, but does not have the requisite background for the position. This can end up being disastrous for the nonprofit. Executive directors tend to be former educators, social workers, doctors, artists, professors, and that's a good thing. They understand precisely what their constituents need. But the most talented and effective executive directors that we've seen, they need a trusted professional financial accounting expert to assist them, to arm them with the information to help them make data-driven decisions, as well as appeal to potential donors. But another important role of the professional accounting experts is to protect the organization from fraud.
So, Jeff, how does a nonprofit and their executive director go about making that happen?
For decades, we have the old model, which has been to hire and build an in-house accounting department. But that's not been working well in recent years. It works well for large nonprofits, but not really for the smaller nonprofits. Small and mid-sized nonprofits quickly find that building an accounting department in-house is time-consuming and cost-prohibitive. The budget simply can't afford both a finance director and a day-to-day senior accountant, not to mention maybe an accounts payable person or an accounts receivable person. What works much better for nonprofits is to outsource their accounting. It's the best practice right now and a hot trend.
Why is that, Jeff?
When a nonprofit outsources their accounting to us, they get an entire team. Team members have various levels of expertise that are used accordingly. As I mentioned, AP, a bookkeeper, senior accountant, finance director. You don't need all of them all the time. You need pieces of them. There is a monthly fee, which in most cases is equal or slightly less than the cost of hiring a full-time employee. There's no learning curve. There's no sick, vacation, wasted time. UNOP CPA Group is always working and available for our clients. When nonprofits lose staff in accounting, it creates a wake of chaos since the knowledge walks out the door with that person. With UNOP CPA, we have all of our policies in written form, and we cross-train so there's no loss of information. Our clients enjoy a VIP level of service. And with regards to today's topic of nonprofits and fraud, having an external professional accounting firm is a powerful preventative measure against fraud. With smaller organizations, the budget does not allow them to hire multiple people to provide the checks and balances needed for proper controls. We employ software that helps nonprofits avoid these embarrassing and potentially debilitating instances of fraud. Additionally, we are covered by professional liability insurance as an extra level of protection for our clients. Outsourcing your accounting will help you solve many of your problems, which will satisfy your board and help your executive director sleep better at night. Fraud hurts your organization in two ways. One is the immediate loss of funds that could have gone to your mission. and obviously hurts your cash flow. And two is the damage to the reputation of the organization and the ability to raise funds in the future.
And that's a real crippler. Jeff, thanks for taking the time today, a few short minutes on a very important topic, fraud and nonprofits. And we look forward to speaking with you again. Thank you.
Thank you, Don.